What's your take on passive investing bubble impacting the ETF market? Yeah. So I think I might have mentioned this a little earlier today, just that the passive ETF problem is that the ETF managers have to buy stocks when those stocks are going up, and they have to sell them when they're going down. And if there's a downward move, if there's some sort of straw that breaks the camel's back, some sort of black swan event, I think, and Warren Buffett has been saying this, I think we have a massive volatility problem. And when that happens, stocks go down like an absolute brick. Index funds are going to be a big problem, huge problem. You will have wished you gotten out before that happens. Yeah, we've been sheltering, hedging, if you will, with cash for sure. You've seen Buffett's rising cash pile that's going in, and he's at 200 billion now. We're 40% cash, but we don't just have the cash being idle. It's either sitting in a bond fund at 5% plus, or it is being used in options trading, like we're going to teach you guys tonight. But definitely cash now, because we don't have a crystal ball. All we know is we can't find really good companies that are on sale very easily. And that is a great indication, along with a whole bunch of other stuff, that this market's going to have to change. So we're just hanging out until it does. Meanwhile, like I said, we're making about 20% a year on options trading. Stock owners will sell for lots of reasons. They only buy for one reason. Okay, they buy for two reasons. One is to fake you out, in which case the purchases won't be very large because they don't want to put money on the line for something that's a problem. And the second reason, and the best reason that they're buying, of course, they think the stock's going to go up. So we really like insider buying as a signal. Insider selling, on the other hand, is so full of nuance, because much of the time, I'd say the vast majority of consistent insider selling is simply to cover taxes from getting stock options, things like that. So insider selling, if they sell 25% of their position, I do pay attention to that. I'm kind of wondering what's the deal. 20%, sure. A small piece, I think it's taxes. So it's a continuum, and you just have to make an intelligent call on it. Doesn't hurt to look at it as a red flag and just see if you can see why. You got to remember, you're buying companies based on what you understand the future will be, not the past. And so insider selling is an indication of the future, potentially. And what you want to do is understand the business well enough that you see the issue. And heck, if you get right down to it, I'd call investor relations and say, why is this guy selling? They might tell you.